Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. How are you guys doing? I'm doing fantastic. The reason being, Bitcoin's price movement has been fantastic. So I want you to imagine this scenario, guys. Instead of dumping your precious Bitcoin and handing victory to the fiat vampires that you escape from, you can weaponize your Bitcoin. Think about locking your Bitcoin into a multisig vault, pulling out cheap fiat liquidity, and then you can redeploy that money right back into harder-hitting Bitcoin assets. Think about this, launching your own personal speculative attack against the fiat system when we're on the cusp of a potential Q4 Bitcoin bull rally for the ages. You can use the currency of the fiat system against it on your terms to stack more Bitcoin while the clock keeps inflating your Bitcoin collateral. It's like borrowing your enemy's ammo to fire back at them twice as hard, and today I'm going to show you exactly how to do it safely, responsibly, and ruthlessly in time for an incoming Q4 mega bull rally. Now, I want to do a quick shout out to Firefish.io, the Bitcoin-only non-custodial lending marketplace that makes this strategy possible without ever handing your keys to a custodian. I've stayed away from a lot of sponsors because I'm not an altcoin person. I believe in Bitcoin only, and the guys behind Firefish are Bitcoin only maxis, reputable people that I really enjoy and love. They provide a very vital service to help you launch your own speculative attack against the fiat system. So Firefish, thank you so much for backing the Bitcoin Wizard community. So this is a question that people ask, why would you borrow against your Bitcoin when you can just sell your Bitcoin? Well, first, taxes. Every time that you sell Bitcoin, you ring the tax bell and amputate part of your stack to Uncle Sam. Borrowing lets the sats stay on duty while Uncle Sam stays outside of the vault. Second is the massive spread opportunity, because over the last full decade, Bitcoin compounded at roughly 86% a year from about $237 to roughly $120,000 now. Meanwhile, quality BTC-backed loans today have an interest rate that is drastically under that 86%, which is a jaw-dropping positive carry. You rent melting fiat at single-digit interest rates while your collateral historically rockets at double-digit multiples. The arbitrage opportunity here is enormous, especially on the brink of a potential huge bull run. And here's another thing, you're paying in weak money. Your interest is denominated in the same dollars that the central banks keep debasing. Every payment that you make is worth a little less in real terms, while the Bitcoin securing it just becomes scarcer and, if history rhymes, more valuable. I'm asking you to flip the default mindset that you have. The real question isn't why borrow, it's why would you ever sell the hardest money on earth when you can make fiat work for you instead? Now, I know a lot of this probably makes sense to you guys, which is why these services exist. But remember, this is not financial advice. This is financial entertainment. If you want to collateralize your Bitcoin to go buy a loan to invest in something stupid, don't pin that on me. I'm just saying you can conduct your own speculative attack. So now we can lift the hood on Bitcoin-backed loans so you know exactly what you're signing up for. Collateral first. The industry norm is 50% loan to value, which means for every dollar that you borrow, you lock $2 of Bitcoin in a multisig vault. A 40% price drop leaves a buffer before liquidation would ever show up at your doorstep. Custody next, there is an escrow where the funds will sit in a 2 of 3 on-chain multi-signature vault. You keep one key, the lender keeps one, and the platform holds the third for escrow logic. No one can rehypothecate your sats or sneak them into a DeFi rug pull. And then there are the rates. This is a peer-to-peer order book, not a bank desk. The lenders will bid, the borrowers will list, and the market usually clears somewhere between 6 and 10% a year. That is a hell of a lot cheaper than most credit cards and a steal compared to selling your Bitcoin outright. In short, you get fiat liquidity without ever surrendering your upside or your principles. All right, now let's ground this theory in a live fire example, Firefish.io. What is it, you might ask? Well, think of it as kind of an eBay, a marketplace for Bitcoin-only borrowing, where the borrowers of fiat will post their sats into a 2 of 3 on-chain vault, and then lenders will bid for yield. No rehypothecation, no trust me bro custodians, just multisig math and market forces. Remember all of those scams like Celsius and FTX? No, we're not doing that. We're only doing this in a reputable manner that makes sense. We can do a bit of a traction check. There is over $100 million already in loan volume, 10,000 plus users, and nearly 1,000 Bitcoins sitting in escrow, which is all racked up in barely 2 years of public launch. That is awesome, over a triple-digit month-over-month growth powered by hardcore Bitcoiners who refuse to sell their Bitcoin. The deal terms are a standard 50% LTV with the liquidation trigger almost 95% LTV, and Firefish likes to brag about a 0% liquidation rate so far because users top up or repay early instead of getting nuked. When it comes to the cost of capital, the rates start out at around 6% APR. That's cheaper than most margin desks and miles below Bitcoin's historical compound annual growth rate. You pay fiat, collateral keeps sprinting in the background. They also have some extras like auto invest rails for passive lenders, lightning or bank wire payouts for borrowers, and open source oracles that you can audit on GitHub. Firefish proves that you don't need a Wall Street middleman to turn your stack into deployable ammo. They just hand you the bazooka, wish you luck, and then let multisig physics handle the rest. Here's a quick look at their website if you guys want to have a look at it, firefish.io. It is the open market for Bitcoin-backed loans. Super cool. It is for Bitcoiners needing capital and those who do provide that capital. If you click on For Bitcoiners right here, it tells you you can get the cash you need, let your Bitcoin grow in the meantime. And I love the bullet points. Avoid taxes because you're not selling, request your loan in literally 10 minutes of time, and you keep your Bitcoin secured by code, not custodians. There's no maximum loan. Try to borrow any amounts that's backed by your Bitcoin. Interest rates from 5%. Now, obviously, they are market driven. You can check the current rates in app. You set your loan terms, then you match with an investor, and then you lock your Bitcoin, then you receive your money. So if you guys want to take advantage of a potential bull rally, remember, not financial advice, you can borrow with Firefish. They'll give you a bunch of reasons why. They have a very slick interface and website, so check them out. Now we're going to talk about the speculative attack flywheel, the one where the magic loop starts spinning. Step 1, you borrow cheap fiat. You lock your Bitcoin in the multisig, then you suck the inexpensive fiat liquidity out of the system, and then just smiling because you kept all of your Bitcoin. Step 2 is to deploy. You can go buy more Bitcoin or a high torque Bitcoin treasury stock like Strategy or Metaplanet and beat the Bitcoin hurdle rate, which would mean that you're effectively double parking rocket fuel on top of rocket fuel. Step 3 would just be then to appreciate as the Bitcoin price climbs, the value of your collateral swells, so the loan to value ratio then shrinks, and then the liquidation risk just fades into the rearview mirror. And then step 4, you unlock headroom so then you can just reload. With that safer loan to value, you can tap an even larger loan, stacking more sats, and then that just pushes the flywheel faster. But remember, this is debt, so you have to be careful. I know you're an adult, I'm not going to hold your hand, but still, you got to be careful. It is debt. Rinse responsibly. Monitor your margins, and you have engineered a personal speculative attack that converts fiat liabilities into Bitcoin assets on repeat. Now, if you borrow against your Bitcoin, the big question is, Adam, can the assets that I buy outrun the interest? And that is what we call the Bitcoin hurdle rate. So let's start with the hurdle. Over the last 10 years, remember, Bitcoin has appreciated at 85, 86, 88, whatever percent. That's the velocity that you need to beat to justify the leverage that you're taking on. Then you enter the high beta treasuries. Fun fact for you, MSTR has outperformed Bitcoin about 3x ever since they started their Bitcoin treasury strategy. It has been Bitcoin on nitrous, and Metaplanet has greatly outperformed Bitcoin as well. Deploying borrowed fiat into either of these high octane Bitcoin treasuries gives you a fighting chance to outrun both your loan interest and Bitcoin's own blistering compound annual growth rate, which is how you can turn a plain single percentage loan into an exponential sat stacking machine. Here's the macro catalyst that nobody's really pricing in: the rate compression, and the pivot is real. 2 weeks ago, the Fed did deliver its first 25 basis point cut of 2025, and signaled more are likely this year. Mortgage benchmarks are already sliding. The average 30-year fixed rate just ticked in at 6.34%, down more than a full percent from last year's highs. Now we're starting to see Bitcoin-backed loans are following suit a little bit. Once the market clears from about 6% APR and it starts to drift a bit lower, you are going to see more lenders chase yield. I'm telling you guys, once unsecured BTC collateral loans start hitting this 4 to 5% zone, parity with mainstream mortgages, latent leverage demand is going to erupt and nobody's going to sell their Bitcoin. It is going to be price rocket ship explosion. Imagine every Bitcoiner suddenly able to refinance their stack at homeowner rates. That is gasoline on a Q4 bull run bonfire. In short, the falling policy rates don't just ease housing, they shrink the cost of capital for your speculative attack. Cheaper fiat, same hard collateral, bigger upside. Strap in every single macro rocket booster and it's all igniting at once because we have some serious price momentum. Bitcoin just blasted through 120K this morning. There's an ETF tidal wave right now. The US spot Bitcoin ETFs are vacuuming up hundreds of millions of dollars of net inflows every single day. You see 3-day inflows topping up at $1.6 billion sometimes. And the futures open interest is hitting a record $220 billion last week. Liquidity that turns small moves into face-melting Bitcoin appreciation candles. And if you didn't know, there's going to be some Wall Street FOMO. JP Morgan just hiked its year-end Bitcoin price target to $165,000. JP Morgan is literally pointing to that gold parity valuation that I just talked about a few videos ago. As retail and institutions are chasing this debasement trade, the potential for Bitcoin is enormous. Supply for Bitcoin is permanently down 50% since last year's halving, while the Fed is starting to cut rates, double barrel liquidity. So I think if you put all of these macro factors together, Q4 isn't just setting up for a rally, it's teeing up for a historic short squeeze on fiat. Borrowing cheap dollars against your Bitcoin stack before the next leg higher could be the highest conviction asymmetric bet of the decade. Now let's talk about fail-safes, because knowing exactly when and how you could be liquidated keeps panic out of the cockpit. There are two trigger types: maturity and price. There is a maturity default. If you miss the payoff date, Firefish will sell enough Bitcoin to cover the principal plus accrued interest. You eat a 5% liquidator fee, but any leftover sats boomerang right back to you. And then there is a price trigger. Let your loan to value drift to the liquidation threshold, typically around 95%. The entire collateral stack is sold to repay the lender, which means you walk away with 0 sats, which is brutal, but obviously predictable. This is the risk that you take when you use debt. But if you believe Bitcoin is inevitable, like I do, obviously that risk is mitigated. If you just make your own guardrails, liquidation will remain a theoretical footnote instead of a headline in your own personal horror story. Be careful, have a look at this liquidation logic, make sure that you understand the stuff before you get into it. Now let's unpack the cash flow side of these loans, because terms do matter. Number one, a bullet repayment structure. With Firefish, you pay nothing monthly. Principal and interest come due in one lump sum at maturity. 3 to 18 months is pretty typical. That means there's no surprise margin calls, no creeping amortization, and maximum flexibility to time your exit. There are market-driven rates. There isn't some bank clerk stamping 10% on everyone's file. It's an order book where lenders compete for yield and the borrowers post their asks. More liquidity means cheaper credit, and lately the clearing band has hovered between 6 to 8% APR, a fraction of Bitcoin's historical growth rates. Fiat and sats stay put. All interest is paid in the same currency that you borrowed, whether it's USDC, Whether it's USDC or the euro, you are paying in units that lose value over time while your collateral remains in the hardest money on earth. That is negative real cost of capital in action, so you are renting weak money on flexible, transparent terms while letting your Bitcoin do the heavy lifting in the background. Now remember, custody risk has totally killed Celsius, BlockFi, and a dozen other clown world lenders. So here's how Firefish avoids becoming Chapter 11 fodder. Number one, remember the 2 of 3 multisig. A hacker would have to compromise at least 2 parties orders of magnitude harder than draining a single hot wallet. There is preset transaction logic. Smart scripts control 3 scenarios only: principal plus interest payment plus partial liquidation for maturity default, or full liquidation if price cliffs. No sneaky rehypothecation code, no yield harvesting side quests. There is also pre-signed recovery TX. For example, if Firefish vanished tomorrow, the borrower and the lender can cooperate to close out the loan, and then you can reclaim your sats. The escrow safety stays intact even if the company goes belly up. And there is zero rehypothecation. Firefish itself never takes custody or lends your collateral elsewhere. Your sats are collateral, not company working capital, full stop. The net result, you keep a direct key, see every UTXO on chain, and sleep at night knowing that your own spec attack isn't funded by blind trust, but by adversarial grade cryptography. And the one thing I love about these guys is that they have a Bitcoin-only collateral policy. They slam the door on the Ethereum, Dogecoin, latest AI frog Pepe tokens because collateral purity matters to these folks. This is a company for Bitcoiners, built by Bitcoiners for Bitcoiners. One asset, one oracle. Bitcoin is the deepest liquidity, most battle-tested chain on earth, and they get that. Pricing it accurately is trivial. Securing it in multisig is routine. Add altcoins and you multiply attack surfaces, oracle feeds, and correlation risks. We don't play with that nonsense here. There's no contagion risk. We all watched Terra, Celsius, and FTX implode thanks to rehypothecated altcoin collateral nonsense. Firefish refuses that risk surface entirely. There's no bridges, there's no wrapped tokens, no yield farming side hustles. This is Bitcoin maxi alignment because diehard Bitcoiners like me don't want my pristine sats swimming in a liquidity pool with speculative assets. A Bitcoin-only vault keeps toxic runoff out of the ecosystem and makes regulatory clarity very simple. The bottom line is that purity equals security. If you want leverage on Shiba Inu, look elsewhere. If you want non-custodial loans backed by the hardest money ever invented, you're in the right place. All right, the theory is now over. Here's how you can fire up your own personal speculative attack in 4 moves. This is an action plan. Remember, it's not financial advice, you little goblin clown rat. Number 1, you can onboard, open a Firefish account, breeze through the KYC, and drop your Bitcoin into the vault. The keys stay split, the sat stays yours. You can do a pilot loan, you can start small. Feel the process, test the oracle alerts, and prove to yourself that liquidation is optional, not inevitable. Then you can go deploy capital wherever you want to. You can wire that fiat into 70% fresh Bitcoin, 30% Metaplanet, 25% strategy, 10% crystal meth, whatever you want to do. You can tailor it to your own risk appetite. You're now long hard money with borrowed soft money. What a glorious thing that's possible. And then you can review your own strategy. You can review quarterly. When Bitcoin pumps and your LTV drops, you can repay early, you can roll the profits into principal, or you can safely layer on more leverage. You can do whatever the hell you want to do. Always protect the buffer though, always. So if Q4's liquidity geyser does erupt and we see a crazy Bitcoin price action, this could be an amazing move if you pull the trigger today, or Bitcoin could go to $10 and you could be screwed in the event of nuclear Armageddon. Remember, that is why this is not financial advice. This is financial entertainment. For the love of God, I hope you understand that. I'm not saying that you need to do this. I'm not holding your hand, clicking the mouse buttons. It is very possible to ride a leverage-enhanced booster rocket while fiat holders watch from the launch pad. My name is Adam Livingston. If you like this content, you can like this video, subscribe to the channel for more Bitcoin greatness, me spreading the orange gospel to the masses. I hope you have a terrific day. Do not party too hard. Do not be a little clown boy. This is debt. Don't be an idiot. But at the same time, have fun if you want to. Have a terrific day. See ya. Goodbye. Class dismissed.